And good afternoon. This is the Elliott Wave daily update for the S&P 500 being recorded on Tuesday, August the 5th at 2 p.m. Pacific Daylight Time. Very, very similar patterns that we got going on. Let me see if I can just kind of bring this back into line here. We can see that top. Now today, we the market ran up and reached the high um, just about 8 o'clock Eastern, probably closer to 9. And that was it. And then the market started to come down pretty much after that. And we headed down for the balance of the day, except on the US Open, they tried to push it back up again, which they had some success. But then once that high was reached, it just started to sell off for the balance of the day. Now, I'm just saying for the patterns that we saw as we crested and made a high, and out the next wave when it kicked in, what it ended up doing. That was the A wave. If this is going to be true to form and how it's being labeled, that we have A, B, then what we're beginning to drop in is the C wave. And again, I'm leaving the labeling up 1 degree higher than likely it needs to be. Particularly, this could be minuet wave A, minuet wave B, but here I'm afraid I'm just looking like it's going to have to come down a degree, and then it's a sub one of sub minuet wave one, etc., all the way down. And then when we reach that five, the low for the five, then very likely that's just going to be labeled as sub minuet wave one. And the reason is like if we are indeed in the C wave, C equals A at 6147. And that's the 100% marker. The 1.618 and then the 382 for the minute fourth wave come in at 6,000, 6,005 down to 5954. So that would be the second um, cluster of support for the minute fourth wave, the first one being right here. And actually the third one being here, but it could come up first. And what that would say is that it would put in a new low. That low here is 62.39. This is 62.35. So just not very strong, but it would put in a new low. And that's what we'd be looking for in the C wave. So, but it's not the most common. And excuse me, this is the second time. Started the NASDAQ and the voice went out on me. So give me 1 second. So what we're dealing with here is, again, a C wave down. And as a part of the minute fourth wave. So gratefully, it's taking a little bit longer than what I thought. The B wave was actually 1 day. Pretty much. This was the first, and this was over the weekend, right? And this was the beginning of the fifth. So this was the beginning of today, so about 2 days. And now we're coming down in a C wave, and I'm not sure how long. I'm looking that it could take a little bit longer to get all the way down to where we're looking for it to get to. In fact, we might roll out till we have some other earnings reports. Now, as far as earnings go, we saw this afternoon SMCI, which did not meet at all, and close to 57, trading now at 49.50. And we also had AMD, which did beat estimates and initially was trading at 177, now trading at 167.80. Actually, they just hit the bid and now it's lowered. So, but let's call it 167.80. And so that's down $7. So again, we're getting the earnings. Even though they beat, they're still turning and sinking it after they get a little bit of a rally going. So that being the message, not sure. SMCI and AMD both related to NVIDIA. And so NVIDIA is also starting to turn lower again after closing lower, actually. But it did have some stronger upside early, and now it's beginning to get sold one more time. Um, Now, important to kind of take a look and to realize that what was going on with spot gamma today in terms of those levels. And today, it kind of wrapped itself around, in a way, the spiders. And the spiders had a call wall at 640, which I thought initially the market might be heading for. But then at 630 was large gamma 1, zero gamma, and the volatility trigger. That was at 630, 630. And it took a while, but when it got down there and it broke, the market began to slide more intensely. Now, let me just kind of open this up because we want to take a look at this. That was the intense sell. There was our opening. Bing, right off of that secondary high, we started to sell off. Now, in the SPX and the ES, that call wall was 64.27. Didn't get close to it. Large gamma 3 didn't get close to it. But what it did come down through is at 63.77. So we were looking for that right here. They got close to it, did not get above it. That brought us in line with falling down and through the volatility trigger here in the ES, which was at 63.42. And we can come right over here, 63.42. So you can see how early in the decline it did, and then what actually happened after. So it broke 63.42, came down, broke 63.27 over here, kind of flipped down, and then came back up. Now, what is it playing against? So it broke over here, but regained into the close, the put wall. Now, we'll see what happens tomorrow with the spot gamma levels. But the importance today is as they start to break these levels, we see volatility turn. And when we start to see volatility turn, the risk on trade ceases. And they start moving back over to risk off trading, which is to sell. So in other words, the hedge from a dealer is going to be to sell. The hedge on the risk on trading is to buy. So we're seeing that kind of reverse, and that adds to the downside pressure. So if we get to see more of that tomorrow, more intense. So what kind of saved it a little bit today was the Russell. So it's going to be those overlapping stocks, the underlying, that are common to both the Russell and the S&P, because the Russell was up, was down, ended up. So we start to see that, the cash is flowing more into those mid caps today. We don't know about tomorrow, but today, that's what happened. Now, I am able to go on the 15-minute chart. We have 1, 2, 1, 2, 3, 4, 5, and I'm going to show you why I put that 3 there. We're going to go here to the line chart. You can see very clearly. 1, 2, 3, 4, 5. So we get the extremes. I get rid of the extremes on a closing basis. I can count 5 down. And that's why I put the 3 where I did, because when I go back to the bar chart, it's like, wait a minute, Michael, that's lower. It's like it was, but it was an extreme, got pushed straight back up. I left it as a mark, but it got pushed up, and that was the actual low for the sequence, putting the 3 there. ABC up, we get a 4. We start to come down 1, 2, 1, 2. This is not, I think it'll be dealt with very quickly once we reopen, or possibly, overnight. Now, what we can't get rid of is the fact that the market has really only completed 3, not coming down and breaking yet below 63.15, we'll call it. We're getting close. So if we tend to gap a little bit once we reopen, then we'll be getting ourselves in a position to pick up some steam and drop it, leaving this as a 1, 2, 3, 4, and then a possible 5 before we get a bounce. Again, I want to just say I'm labeling it accordingly. So, but it is, I'm hoping, going to turn into a 5-wave structure. but not necessarily on this degree. I may drop it a degree, and then what comes up once this 5 is in is this one of this degree gets moved down to it. And these are down a degree. And then we have a wave 2 up, and then we come back down into 3. So because the NASDAQ would appear to be ahead of the S&P in terms of this particular C wave decline. The Nasdaq took it a little bit harsher, let's say, and the S&P closing down 3150, the Nasdaq closing down 204, and that's based on those earnings. So that kind of helped pull it down, and they don't have that much weight in the S&P. So moving averages on the 15-minute, they're good if you're trading, but we're going to go out to the hourly and take a look to see what they are doing. We can see they're falling into line. Look at that on the 1 hour. There's the 200, there's the 78, there's the 30, there's the 8. They're in alignment to go up. Excuse me, to go down. I say it so often, right? They're in alignment to go down. Now, if I put it out to the daily, let's see how it's affected the daily today. See if we got any changes. We do not. They're still holding pretty well on the daily. So the daily's not turned negative yet. The daily still remains in a positive, whatever we want to call it. Not necessarily positive mood, but more of a positive stance. The 8 is still kind of turning lower. The 30's gone flat. The 78 wants to go flat, as does the 200. But when they do, you're going to see those support levels that they will provide. And when they're broken, that's when we probably get some good slides going. If it gets down, breaks it, we're going to get a good slide down. All right, so on a spot gamma level, we continue to have at 60.27 here in the ES, it's large gamma 1, and it's been there for a very long time. It moves down simply because premium's coming out of the future. So, but it's been sitting at 6,000 SPX, and it has stayed at 6,000 SPX for, I would say, at least 3, maybe 4 weeks. It's been sitting there. It was there when we came up and we crossed over, but it remained because of probably what was added at that level to give it positive gamma. Okay, so the gamma levels will be updated tomorrow morning. In terms of economic data, we have nothing. We have Fed Governors Lisa Cook and Boston Fed President Susan Collins are on a panel discussion. Don't know where, don't know what it's about, but I'm sure it has everything to do with interest rates. Outside of that, we have no economic data. Thursday, we have initial jobless claims, U.S. productivity, unit labor costs, and wholesale inventories, plus consumer credit at 3 p.m. And one Fed President Bostic will be out giving a speech. So they are just very busy being able to try to put everything together to either calm some markets, calm some economists. We'll see. I don't know. All right. So basically, we're still on track for this minute wave 4. That's how I'm going to leave it for right now, allowing the market to trade and make the changes that I need to make in terms of degree or what the market is actually doing. But thus far, I am leaving it as if it really is doing the A and the B. And now we're coming down in a C wave. Again, if it stops there, doesn't come any lower, stops here, and they start to rally it, then I could probably talk about that it's likely was a 1, 2, this is a 3, and this is a 4, and we're coming back up, and we're going to make another new high. And just to kind of revise or talk about what the those fibs would be again, I just put that down there, and you got that 618 at 63.80, and that would remain in place. 786 would also be out there at 64.19. Again, because I'm counting at 5 down, I'm not looking for it to go up and equal it, but it certainly can continue to go up in a B wave before we start to come down. But it reacted perfectly on coming down out of that B wave today. So I'm going to remove this so there's no confusion. If you need to, you just You just rewind back to where you see it and then copy those levels down, or put it in yourself. And it's just retracements from that high to that low. And you'll get your retracements 618 and 786. All right. That is going to be it for today. And our next update will be tomorrow morning.